Good morning. And over my coffee this morning, I want to talk a little bit about taxes. So, I am an accountant and I've been an accountant for 25 years. I also run two small businesses, and I had a third one which I sold last year for e-commerce. But I do run two small businesses, and I am here to share how to do some tax savings for content creators. So one of my businesses that I have is being a content creator, and I post dog videos, recipes, and I primarily post on YouTube, and Amazon is an Amazon affiliate, and I have just added LTK or reward style. Not so much for the style portion of it, because I'm not really a super stylish person living in northern Minnesota. I have no reason to wear all the fancy outfits, but I do post a lot of outdoor type things and dog videos. So anyway, taxes are not a very understood thing for content creators. So I'm here to help you on some different ideas that you can think about and different ways to organize and keep track of all of your expenses for tax purposes. I hope you can hear me because I have a brand new microphone, but I hit it underneath because it blinks green, which I don't really care for, but the microphone works really well. And so anyway, taxes. Taxes are something that you have to pay. Even if you die during the year, you have to pay taxes. Death and taxes are two things that will always need to take care of. So when I talk creator taxes, I am talking about if you are self-employed and you have expenses for running your business, they're a write-off when it comes to taxes. And I encourage you to keep track of every penny that you spend, every single penny. Now, this is for people that are using a Schedule C when they do their taxes to write off their expenses and report their income. I'm not talking about corporations or partnerships. That's a whole completely separate thing. Most of you that are watching this video are not going to be at that level. I'm also not a tax accountant, and I am not an enrolled agent for the IRS. I prepare taxes, but don't take this as legal advice. This is just from a content creator and doing this for 20 years. What I see that works and what doesn't work. So the number one thing is keep track of every penny you spend. My number one advice is to have a separate account for your business funds. Don't intermingle your personal and your business funds. Especially when you get started, it's a lot easier to keep track of. It's super simple and free to set up a business account. At most banks, there's no fee until you get to their higher levels. It's just much easier to keep track of. If you can afford the $30 a month for QuickBooks online, I highly recommend that. It's super easy to keep track of. You can push a button at the end of the year to give to your tax accountant, and pretty much everything is done except mileage. You want to keep track of that separate. So the things you really need to keep track of as a content creator is the items that you use as a necessity in the business. So for example, as a content creator, I write off my cell phone because I use my cell phone 100% for business purposes. I write off my internet because I need the high-speed fiber, and I also write off my storage, my Apple $9.99 for a terabyte, because I have so many videos that I have so much storage I have to keep for that. So I will write that off. I will write off supplies that I purchase for my business. For example, my microphone. For example, my computer. That's usually, sometimes if it depends on how much the computer is, if it's a depreciable item, I just write it all off in 1 year as a Section 179 expense, because computers are $1,500 right now. My tripod. The other thing I keep track of is mileage. Mileage is a huge one. Make sure every time you get in your vehicle, and it is for your business or your content creator business. Let's say you're going to shoot a outfit thing 5 miles from your home in a sunflower field. Keep track of that mileage. As long as you have revenue coming in for your business, you can claim deductions. So as long as you earn money as a revenue producing business, you can write things off, because you're basically trying to earn money that is a taxable income, so you should have those ability to write off. If you're like me in the first year and on my content creator journey, so like I said, I have 2 businesses. So on the content creator one, I'm not monetized yet on YouTube. I've been working on that for 9 months, so it's really difficult. But I do have income from my Amazon affiliate, and I'm hoping that my LTK will also start creating some income. So I will have income this year that I can use for the write-off amounts that I have. So mileage is a big one. Keep track of it, even if you have to put it on a spreadsheet, a Google Drive, a piece of paper. Keep track of your mileage. Keep track of if you have to buy something for your creation content. Let's say you have to order something from Amazon so that you can review it. Let's say you need to, and now this is not stuff that you're going to order, review it, and then wear it for 6 months. This is stuff that you're ordering in specifically for your business. You do not want to cheat the IRS. So anything like that. The other thing is travel. If you have to travel for your business, or let's say you want to attend the LTK creator thing that they have in September, your airfare and hotel and all of that would be deductible, because that is specifically for business purposes. If you bring your spouse, you can't write off your spouse's account or your spouse's travel and expenses like that. So it's just you and just your expenses for running your business. So that is basically on the creator side, the different things you need to keep track of. I highly recommend QuickBooks. That is just super, super easy to use. You can keep track of everything, because, I forget what I bought in February, different things like that. So I'll give you a personal example of mine. So I do mostly food videos and dog videos and things up in northern Minnesota. So my food that I buy specifically for the recipes that I make, that I post on YouTube, my website, Instagram, TikTok, and LTK, and Pinterest. So I have 7 places I put these things to try to get things moving. When I post all of those, I write down what that recipe costs me to make, and I use my business credit card to purchase the food for those things separately from the food that I purchase that we eat as a normal family in our house. And I will write off the cost of that food, because I am engaged in the process of creating a profit for a legitimate business. So I do write off the portion of the food. And most of our food I donate. Whatever I make, I will donate. I bring to seniors in our area, neighbors, different things like that. So it's not like I'm consuming the amount of the recipe that I have, the amount that I have written off. The dog purchases, I normally do not write off, because I purchase them, review them for our 2 black labs, but I continue to use those products, and so I don't write off like a bag of dog food that I'll bring in and have like that, because I want to be able to, the number one thing when you are talking about write-offs and different things that you have, is you want to be able, if the IRS agent is sitting across your table, you want to be able to explain to them why you wrote that off and how you can justify that expense was a legitimate business expense. So if I bought a bag of dog food and I said, well, I brought this in to review so that I could make affiliate commission off of this, but I turned around and I fed it to my dogs, they're going to say, well, you had to feed your dogs anyway, correct? And I would say yes. So they would probably say that was not an allowable expense. However, if I order in a winter coat and I decide to gift that coat to someone else, but I did a whole review on it and set it all up on all the different things that I could earn affiliate money from, as long as I don't keep that coat for myself, I would consider that a write-off amount. You could probably say some creators probably go the other way on that. Now, another thing that a lot of travel creators run into is they go on all of these big fancy trips to create content. I think there's a fine line there that, maybe when you're at that location, you could write off your hotel just for that evening if you have an income producing reason for being there, such as you're taking pictures for the hotel or you've been hired to do that. But just to go to Mexico and take a bunch of pictures and throw it on there, I don't think you should be able to write off the entire cost of your trip. As an IRS agent, I would probably say, I think that's a little unnecessary for your income producing activity. Remember, the IRS wants you to make money because you have to pay taxes on the revenue that you make. So they're going to really watch those expenses if you end up getting audited. I have seen that many, many times. So the other thing is you make sure you keep really, really super good receipts. So all the food that I buy for my recipes, I keep all the receipts, I throw them in a bucket, and so I have exactly like what I made out of those recipes, the date I made it, and I kind of will throw it in a bucket. Now, like I said, I don't have income producing on that yet. I'm sure hoping to by the end of this year, but I am still going to write off the cost of all the food because it is expensive to get started in that particular niche in YouTube and on the internet. So I do have some income producing from some of the affiliate links from that, so I will have a little bit more to do there. So now switching from those tax tips to my second business that I have. So I live in northern Minnesota, as most of you know, and we live in the land of cabins. And so my second business I have is a cabin concierge service. And so what I do is for people in our area, I will turn over VBROs. So meaning my team and I will go in and turn over VBROs, clean them, get everything restocked for the next guest that's coming in, because a lot of the people that live in our area are not specifically from here, and so they need someone to watch their home and watch their expensive possession that they own in our area, and make sure that the VBRO isn't damaged, the garbage got taken out, all those different types of things. Some of the other services that we offer is a cabin watch. So we will visit once a month through the winter months just to make sure they don't have rodent issues, breaking and entering. The snow plow people have showed up and gotten rid of the snow. We also will do something that is really unique where I actually stock refrigerators. A lot of our cabin owners don't have time to actually go to the grocery store, so I will actually literally go and stock their beverages and their food that they need for the week that they're here, or the 3 or 4 days that they're here. I will also do some catering, or line up a catering company based on the needs that these particular people have. So it's a lot of service-based work. And in this particular case, my tax write-offs on this that I keep very good track of is all of the cleaning materials. A big one on this one is my help that I have. They're all they're all 1099 employees, so I will issue them a 1099, and then they take care of their own taxes because I do not want to deal with all of the taxes for having actual employees. And then the other thing I keep track of is my mileage, because I do put on a lot of miles for this particular type of business. So mileage is a really, really big thing in this particular area. This particular one is a lot of service based, so there isn't a lot of actual deductions, because if I do like a grocery restock, it's a direct, I charge a fee plus a direct, they give me directly back what I had spent on the groceries. So that one isn't quite as much, so it's mostly mileage. That one I just keep track of on a regular spreadsheet. I don't really need the QuickBooks for that particular one because I don't have a lot of products coming in and going on that particular one. But so those are some tax tips on the two types of businesses that I run. Feel free to comment and reach out if I have missed something, or or you have another suggestion or something like that of things that are not particularly covered. Again, not a tax professional, just giving you some things to think about for the tax implications of content creators. Making sure, my number one tip is if you can't explain to the agent sitting across the table from you when you get audited why you took that item as a deduction on your taxes, then you probably shouldn't deduct it. If you play fair with the IRS, pay your taxes like you're supposed to, pay your estimated taxes, and you should be just completely fine. It's the people that get in trouble that try to cheat the system. They know how to find you, and especially content creation is such a new thing right now, and a lot of people are trying to do this full time for the benefits of working for yourself and being able to work wherever you want, that I expect the IRS will start having a lot more enforcement action on some of these things. So you really need to be careful. Just really good, solid financial advice. And it doesn't hurt to have a tax accountant too. In my particular case, I'm not making enough that I would hire somebody yet, and I've been an accountant for 25 years, so I do my own taxes. But for someone that is very new to this and doesn't understand how the tax law works, it does not hurt to have a professional that can charge you by the hour, or charge you quarterly even, or even every 6 months or something. You could just sit down with them and print out your QuickBooks or print out your information that you have and kind of see where you're at. But anyway, that is my tax tips for creators and some of my history of the two businesses that I own. I encourage you to follow me or reach out for any questions, and I hope you follow my channel because I have so much to share. Thank you.